market is euphoric once again, almost as if you guys don't remember where we were just a few days ago. And before we even get this party started, you need to know why. Because if you don't know why the market is bullish right now, then you're going to miss key indicators that could significantly impact the next move of the market. One of the key factors I'd like to point out is this mustache. Do you think it's a coincidence that the first video I did with the mustache, you can see here on January 29th when I reshaved it? Let's look at what's happened in the market since that exact moment. Boom, January 29th, we have a Bitcoin price of $37,000. Might as well be the bottom, and since then, up only. You think I wear this mustache for fun? No, I'm doing it to save the market. I saved the market. I'm doing this for each and every one of you out there, and you're welcome. But in all seriousness, if you guys are excited for this one, smash that like button, destroy it, because we have a ton of information to cover today. First and foremost, I do want to say that I did tweet this several times on the way down. Look, there's always a bounce, a significant bounce. Even if things are really bad, you're going to get a major bounce to FOMO in some of the weak hands, some of the more emotional money, and that's going to be that exit liquidity, that exit pump for the big whales. We didn't see any of that yet, so maybe that's what we're seeing right now. I tweeted this a couple of days ago, or almost a month ago now. There's always a bounce. Spring feels near. If you were caught offside during this dip, sell that bounce. Now, if you're ready for anything, and want to be here for the long-term years, 2022 will be the land of opportunity. Now, what I want to say here is, although this feels really nice, and you can see us getting over some prior overhead resistances, there are plenty of reasons to stay cautious right now. We are certainly not out of the woods and macro bullish yet. One of the things I want on your radar is that essentially we had this strong jobs report, and this strong jobs report means that it's more likely that the Fed is going to hike interest rates in March and May. No, the Fed is not coming in to save us and bail us out this time, but it might not matter if the market is responding well during this time. You see, the stock market has been known to go up even more aggressively during periods where interest rates are rising. It's a weird effect, but there's still this knee-jerk emotional reaction to the markets. That said, we don't know which direction everything's going to go. It certainly feels quite bearish. It feels quite unstable, with companies like Facebook doing nosedive, absolute apocalyptic dumbolas to the tune of hundreds of billions of dollars in value in a single trading session. That is some historic stuff. Meanwhile, Amazon's looking strong, Snapchat looking strong. The companies that are showing strong revenues and strong fundamentals are still performing. So I guess it's just the everything bubble is stopping, but strong companies can still thrive. So a return to logic and fundamentals doesn't sound all that bad. But still, it's not just the Fed that's going to potentially hit the markets with higher interest rates when that news does drop. We also have the White House that wants to add some executive order on cryptocurrency, and we have no idea what that's going to be right now. Probably something around KYC or stablecoins. We will have to find out, but that's coming up this month as well. So there are two major points of caution here that could have some serious impact on the market itself. So this pump, while it does feel nice, we love green numbers, the reality is we ain't seen nothing yet, and we have a lot of work to do before it's macro bullish. The market is like a rubber band. It simply doesn't go in one direction too far without having a move in the other direction. You can only stretch it so far. This is where the RSI bands and the Bollinger Bands and these other types of technical indicators are able to create these areas of interest. But more importantly, as Secrets of Crypto says, quoting his prior tweet on January 22nd, when the price rises too fast, you take profits. When the price dumps too fast, you dollar cost average. And that's how it's done, boys. Remember how you felt at that time? Bitcoin has climbed nearly $10,000 since then, and this was only 16 days ago. The game is easier than you think. It all comes down to controlling your emotions. Now, we talk about this almost ad nauseum, almost like a broken record, that when things get really overly bullish, that's when you want to be selling, and when things get really bearish, that's when you want to be buying. Of course, the reality is that most people want to have more of an on-off switch, not a blended approach. But if you're looking out many years into the future, which I highly encourage you to do, it seemed impossible for me to do this when I started crypto because I just had too many monetary needs. But if you're able to really plan this out and understand that these systems are designed to grow, then you understand that low prices are generally good and high prices are typically a time when you might want to rebalance your portfolio. Again, these types of skills you learn in time, but just know you don't want to wait till Bitcoin is back at all-time high to start buying again. You want to have a strategy for how you accumulate during bearish periods, as that's where the real real money is going to be made. Again, we have no idea if we've seen the bottom. There's a part of me that feels like we haven't yet, and that next lurch down once interest rates actually change might be a point at which the market can build from. We might have already seen the bottom, or this might be a temporary period of the next 6 weeks or so where we just have a nice bullish sort of mini run. I don't know. I'm personally so focused on building right now that I haven't been trading much. And to that effect, I'd like to announce the party starts this week. If you know, you know. Be on the lookout for a hello world from imposters. I couldn't be more excited for this moment. Make sure that you're following, make sure you're paying attention, because the fun is about to start in a major way. Now, in the market, it's pretty clear to me that there's one category that is totally different from the others. It's getting memed and hated on a lot because the valuations are so high, but the reality is that gaming is the only sector I see going mainstream. I see games truly onboarding a next generation to this technology of NFTs, and it makes me almost shake with excitement. So seeing GALA games rally 100% off of their lows, again, the gaming coins are going to be extremely volatile in both directions. Do I know if this is a good price for GALA or not? No, but I have a thesis about gaming, and that's the one I'm going to stick with. Now, I also had a thesis that NFTs would do incredibly well as soon as the market calmed down, and that has also panned out, with Bored Ape Yacht Club hitting 120 ETH, and pretty much every major NFT collection seeing massive growth, with most of the buying activity now being concentrated at the high end of the market. And we're even now seeing and observing, after the first month, the first ever vampire attack on OpenSea. Now, this was done by LooksRare. LooksRare effectively airdropped a token to OpenSea users and allowed for fees from the marketplace to be paid out to those holders. What ensued apparently was a bunch of wash trading, because what we see here is that OpenSea's total volume over the last month, and mind you, LooksRare doesn't even have a month full of data here because they were only launched on January 12th or 11th. But the reality here is that they've done $15 billion in transactions versus OpenSea's $5.6 billion. Again, this is a record for OpenSea. But when we dig into the numbers, it gets a little bit different. As you can see here, we have two charts showing the OpenSea daily users versus LooksRare. On any given day, you have about maybe 1 to 2% of users on LooksRare that you do on OpenSea. You can see here the most recent daily period is 1,382 on LooksRare and 52,630 on OpenSea. Now, when you look at the actual number of transactions, it gets even more abysmal, with 180,000 transactions on OpenSea compared to just 3,000 on LooksRare. But still, you're seeing LooksRare clock anywhere from 2 to 4x the amount of transaction volume in the amount of money. Now, of course, this shows that there's pretty much no one using the platform. There's very few transactions, yet way more volume. And so it's pretty clear that right now, LooksRare, as far as an actual platform that people are using, still has some work to do. However, the amount of people I've seen talk about the token and how liquid it's made them, the amount of rewards they've gotten, and how it's helped them actually reinvest back into the NFT market, to me is extremely bullish, because what we've seen right now is the playbook is clear, that airdropping a token to OpenSea users is a pretty much completely free, not completely free, but it's a quick access way to get the entire attention of the entire NFT community. And I see a whole wave of projects taking this strategy as we work our way through 2022 and beyond. To me, this is an amazing strategy. And even though LooksRare hasn't fully caught on, I see a lot more of these types of projects coming. So as much as JPEGs feel like they're now in a bearish trend, the reality is that NFTs don't do as well when ETH pumps. And what have we seen since pretty much the last week is ETH pumping. So NFTs have cooled off a little bit. It's pretty easy to see this connection. Low fees and stable ETH means we can actually get a lot more ETH for our NFTs. If ETH goes crazy, people want to be in ETH, people want to be liquid, because it leads the whole altcoin market. And that's why we talk so much in NFTs, especially in January. We've been talking about staying liquid, because that was the big trap that people got into back in October, was they weren't liquid enough for when the shift back to altcoins happened. So again, I don't think this means that NFTs are done, because we don't know how significant this ETH pump will be. To say that ETH is just going to go straight back to $4,000 or $5,000, I'm not personally a big believer in that yet. So we just need to see what happens here, and just know as ETH gets boring and stale, NFTs should have really good upside. As ETH starts to move, it's time to get liquid and understand that maybe you'll be sitting on those NFTs for a bit. which is why it's so important to invest into projects that have a through line, that have the potential to be durable blue chip-esque projects. This is why we talk so much about Bored Ape Yacht Club, because it is by far the most sustainable, the strongest community. This is why communities like CyberKongs and Cool Cats and Neo Tokyo are so exciting, because those communities are so bonded and so invested that they're not going to go away just because the floor price drops a little bit. There's a much deeper level connection there. And these are the types of projects that I think are the ones people should be excited about and studying and looking at. Now, I wanted to address this because I actually just saw this, which is essentially that Warren Buffett said that if he needed to, and he was managing a portfolio of $1 million or thereabout, that he was confident that he could deliver 50 to 100% returns using something he called the cigarette butts style of investing. Now, according to Warren Buffett, the goal in this style of value investing is to find something so cheap that it has to be a good deal. In his typical folksy way, Buffett called these investments cigar butts. Buffy boy doesn't smoke cigarettes. He's smoking stogies, of course. Sure, cigar butts may be worth little, but if you can pay even less than little, you might still get a few puffs out of them. Now, to me, this screams low cap altcoins, and it screams being savvy in the market. Does Buffett think that these discounted penny stocks are going to change the world? No. But does he believe in his heart and soul that he's buying at prices that are just way under market, and that there's potential here for a few little moves in the market to allow him to cover and exit that position? Yes. And this is why we talk about low cap altcoins on this channel. And honestly, I get a lot of flack from it from the non-altcoiners, from the people who only want to focus on very high market cap coins or just Bitcoin and Ethereum and call everything else a scam. Well, the reality is that this is the strategy that the most successful investor in the world would use if he had a smaller stack. It's a higher risk strategy, and it will allow for more rapid gains quicker. Now, once you get to a massive wealth position like Buffett is in, you want to preserve wealth. You want to invest purely in things that you're sure will go up and you can control the variables. But if you're not in that position, again, feels like Buffett, if he was trying to make it, would be absolutely investing in meme coins, altcoins, NFTs, trying to mint the next 100x JPEG. These are the types of things that allow for people to start with a little and end up with a lot, but of course, most of the time it doesn't work out. Now, if you understand those probabilities that you have a bunch of small bets that might end up becoming meaningful, then you understand that most of them will lose, and that's part of the math. That's part of the probabilities. So it does make me excited because the type of investing that we've been preaching here on this channel, which is more risky, and it does attract a lot of negative attention from people who would say that that's irresponsible. To me, it's the only thing that makes sense. Looking at 50, even 100% returns for a small stack is usually not going to help someone totally change their situation, potentially go full-time crypto, or make any meaningful impact on their financial freedom. So I was pretty excited to hear this. And if you're out there digging through Telegram, digging through Discords, trying to find the next big opportunity, then you're not alone. In fact, it makes me think you're in good company. So it does feel like we're in a little bit of a lull here, in a positive momentum streak, but how long it lasts is very uncertain. If you were super down bad over the last month and it really affected you, then you should look at these bounces as a chance to rebalance and be less down bad if that's possible. I'm personally okay with the profits I took during the bull run. Again, you should always be taking profits during the bull run. It does feel as though this JPEG move is reaching a little bit of a consolidation point. There's definitely a bearish turn as soon as ETH started pumping, but I do believe that with ApeCoin coming up, supposedly there's a bunch of Super Bowl stuff happening with crypto and NFTs. The launch of Coinbase NFT is coming, and we also have more vampire attacks coming with airdrops for the entire OpenSea user base. It does feel as though there's some logic that another wave of JPEG madness is not too far away. That's how I'm approaching the market. I'm staying super hungry, looking at gaming projects, especially playable games, and getting really excited for what the industry might look like in a few months after real games make their way into the hands of users across the globe. I'm super hyped for this. Again, 2022 is the land of opportunity, but of course it's not going to be easy. It looks like this one is going to be for the scrappy ones out there. I hope this episode helped you out. If it did, smash that like button. If you liked the video, like the video. As always, I'm EllioTrades. You can find me on Twitter at EllioTrades. I can't believe it. Hello World from Imposters is coming this week. I'll see you very soon on the next episode.